Righty. So I just about 45 minutes ago, I was at Biscuits with not only whom I now consider a really good friend of mine, but more importantly, because I do a lot of I walk that line.
Mhm.
That the line we
Mike's
talk about.
creative.
Yes, I am. But my real estate attorney, the attorney that we use for the Recon Group, and when agents reach out to me or clients reach out to me, who should I use for a real estate attorney? Christopher Charles from Provident Law is our guy, and his office does so many more things. And your team also did our will and family trust. So do a lot of different things. But we've invited Chris every couple of months to come on. We talked about and what I wanted to talk about, Chris, was things that on the legal perspective, things that we can expect to pop its ugly head, that they're already beginning to pop their ugly head. One, for maybe some of our actions over the last couple of years, and we didn't talk about that at breakfast, but that whole what we were saying to buyers to tell them that they had to do this and this and this and what we're expecting. But we want to start off talking a little bit about, and I know you don't like the specific term post possession. You've got a different term that you use, but for all intents purposes, and you can pop those
Post liability.
headphones on if
No?
you want. We're fancy here now. Chris hasn't been here in a while. He doesn't know we got headphones. But let's talk, because you had a very interesting story about some post possessions, and then we wanted to also get into yet a great story about waiving inspection. So let's talk about those things. Let's jump right in.
Sure. Yeah, thanks again for having me. Always a pleasure to be here. Thanks for the kind words. The story that I wanted to lead with, just to kind of emphasize the importance of risk management and the use of AAR's forms and following West USA policy, is a real life story that just happened last month, and a plug for AAR and West USA's policies. I posed a quiz, pop quiz to Mike at breakfast,
and I got the answer right away.
He nailed it. He nailed it. So I was sharing with Mike at breakfast that I serve as a mediator for AAR, and last month I mediated a real estate dispute involving an agent. And the buyer had brought a claim against their former agent because the buyer went under contract last year, 2022, when the frenzy was still happening, the first quarter of last year. And the agent had decided to waive inspections to make their offer more competitive. So the buyer submitted an offer, waived inspections, closed on the transaction, and then towards the end of the year, by December, the buyer believed that the property was worth less than they had paid. And so they were having some buyer's remorse, and also found some defects in the home, roof issues, a couple other minor issues that they complained about with the property's condition. And they had regretted that they had waived inspections at that point. So this buyer filed a lawsuit against their former agent for professional negligence, arguing that the buyer's agent should have told them not to waive inspections. And so that was the crux of the buyer's claim, that the buyer's agent was negligent and not properly advising them regarding the importance of doing inspections, and therefore the buyer's agent was negligent and should pay the buyer for the value of the repairs that were missed. So there was a sharp agent on the other side. And so my question to Mike, and I'll pose this to the audience here, if you find yourself in that situation where your buyer chooses to waive inspections, what form should be submitted with the purchase offer?
Todd? All right. Binzer.
The Binzer.
Right away, because you're now waiving repairs.
Mhm.
You're pretty much saying you're buying the property as is. It's submitted with the purchase contract. And to my knowledge, that is the only way that a buyer can truly waive the inspections without any recourse or any way to come back.
Yeah, and importantly for our discussion here today, that is the best tool to protect the agent in that situation. And it is important that be submitted with the purchase contract, because the Binzer has language built into it at the bottom of the form that provides in bold language that the buyer has been advised by the agent of the importance of completing the inspections, doing the inspections, and to actually go and have the inspection done. So in this case, the buyer actually signed that. The agent had told them about that, which completely, torpedoed the buyer's claim. So in that case, the Binzer form provided a complete affirmative defense to the agent, and the agent got off. It was totally absolved of any liability. So I just thought that was a really great example of the importance of following the procedures, the policies, doing the steps, and because it matters and it protects the agents at the end of the day and the client at the end of the day.
So then, kind of segueing into this, because we didn't talk about this as a conversation we were going to have, but I'm pretty confident, if I was a betting man, that you've got a lot more buyers that are popping up and saying, I overpaid because my agent said that in order to win the deal, I had to pay above asking price. I had to waive appraisals. I had to do this and that. I'm not anticipating the same type of market this summer, but if we hit a buyer frenzy again, we have a lot of agents that's the only world that they know. How is it true? Are we seeing those things? And then how do we protect ourselves as agents?
It's not as bad as you might think. I'm seeing more claims against the sellers than the agents. So the claims against the agents are more rare, but I am seeing, as I kind of predicted last year, seeing more claims against the sellers for non-disclosure, misrepresentation regarding the condition of the property. But what the agents can do to protect themselves in those situations where we've got a frenzy, just like the example I just highlighted, follow the procedures, follow the broker policies, use the proper forms, and you should be well protected.
Well, and I would also say what my practice, what I like to do is anything that deviates from the norm.
I was just going to say, and anytime you're getting into the addenda, special terms and conditions, seek advice from the broker, call real estate lawyer. But anything that deviates from the norm, you do want to have somebody look over your shoulder.
And create, like I always try to create an email or a text thread verifying what we just discussed, so that if anything pops up, I have now some proof that I did advise the client that maybe waiving the appraisal is not a great idea, or this is what's at risk, and so forth.
I prefer, well said, Mike. I prefer text. I'm sorry, I prefer email. It's difficult because so much of the way that we communicate today is through text message. But anytime we're talking about important conversation, memorializing conversations, giving advice, I think a good policy is to use that with an email. I have clients. I give my cell phone number out to select clients and people like Todd and Mike. And when people text
Nick,
me,
maybe when you grow up, you can have Chris's cell phone number.
And when and so I'll text socially, with the text message. But anytime we start getting into legal advice, I always transition to the email so that there can be a record.
So is it fair to say, we've had this conversation throughout 2021 all the way up until just today, and realtors' jobs are historical evidence. That's our job, is to share historical evidence. If somebody says, what should I pay for this property, realistically, a realtor should never recommend they pay more than a comparable value. But a comparable value, if it's 2 weeks old, that already includes market adjustments for what people have paid, but prospective buyers. So we can accelerate the problem by constantly telling people the market's moving so quickly that they have to pay more than maybe their fair share. But remember, there's never going to be a lawsuit unless somebody believes they've been harmed on a particular topic. You have to have somebody that has a loss or some kind of a financial loss from that perspective. But if they, even fiduciary, a 2-year statute
statute
here
limitations
and 6 on contract law.
Correct.
Yeah. So, you got 6 years to worry about what you put on a contract, but only 2 years to worry about what you said to them and your representation duties. But in the end, it really boils down to that. We have to be careful. So so Chris, would you recommend this, or what would you recommend? Let me just put it this way. So people say, I want to waive my appraisal. Okay, that's one. Number two, and I'm not necessarily looking for individualized answers, but what would be the easy way for them to protect themselves on all of these issues? But waiving appraisals, shortening inspection periods, telling people that they have to pay more than sale price, more than the list price in order to acquire a property from an agent's perspective. What would be the best thing for agent to do to protect themselves in those situations? Meaning that they're talking about with their client waiving an appraisal or shortening the inspection period, or what should an agent do or say to a consumer to protect themselves?
I believe the standard of care does require the agent to inform the clients of the pros and cons of waiving those important due diligence processes in the transaction. So I do think the agent should have a conversation with the client explaining, the value of the appraisal, the value of the inspections, and that it's generally prudent to do those steps. And if the client chooses not to confirm that in an email, that, hey, you've been advised of the benefits of doing this, the consequences of not doing it, and you've also been advised to seek the advice of a licensed attorney, an appraiser, specializing in these particular specialties.
Well, unfortunately, our crew, everybody listening, is not going to be able to get a hold of you because this is the third time and I still haven't fixed your email address up on the screen. So obviously, it's providentlawyers.com. We're just missing the L. So I just wanted to clarify that. My bad on that. So that's how you get a hold of Chris. And obviously, that is his phone number. So we're gonna end this morning spending quite a bit of time talking about wraps and seller carrybacks because I think that's where our market's going right now. But I know you wanted to spend a couple of minutes just talking about, we call it post-possession agreements and post-possession scenarios. You have a better term for it, but I'm just going to call it post-possession because that's what we know it by.
Right. Most realtors who I interact with, that's the terminology they use, post-possession agreements. The term doesn't make a ton of sense to me. I like the term post-closing use and occupancy agreement. And there's intentionality that goes into each one of those words. Post-closing use and occupancy agreement. And they continue to come up. So Mike asked me last week, what type of issues are you predicting that we see this year, and what are kind of some of the legal issues that we're bumping into right now? And wrap agreements and post-closing use and occupancy agreements continue to hang around. As Mike pointed out, the inventory, only about 9,000 properties in Maricopa County right now. So what I'm hearing from clients is, sellers are happy to sell their property, but are then regretting once they get a contract that they can't find the right property to move to. So they're running into some situations there where, they don't want to close, or they want to extend the close, or they want to negotiate a post-closing use and occupancy agreement. I told Mike in the last 6 weeks, I've had 2 cases where the seller tried to back out of the contract. The seller just decided, I can't find anything. I just don't want to sell right now. So one obvious solution in those scenarios is a post-possession agreement. And I understand West USA has a form that is available for the agents to use. So,
and I think it's on the dashboard, right, Todd? It's not an AAR form, not going to be found at Transaction Desk, but our broker staff's created our own post-possession agreement, and it's pretty bulky and very, very thorough.
Well, if they're also following the rules, all of our agents, you'll know that you're required by law. I think it's our 428-1101K that basically says that whenever a consumer asks you, depending upon what side of the transaction, about a pre or post possession agreement, you have an affirmative duty to recommend to them, and of course, to Chris's point all day today, put it in writing. But you send over something that says, Mr. or Mrs. Smith, I understand you're interested in a pre or post possession, whatever it may be. I'm obligated by law to tell you to seek the appropriate legal counsel of a tax, insurance, accounting, and real estate attorney counsel from those people as to the risks associated with a pre or post possession. And we have to do that. So to this particular point, if you do have any of those, once you put something like that in writing, the consumer says, what? I need an attorney? And that's kind of a precursor to a post closing liability protection.
Hmm.
Is if you do send that and they do get it, and remember they get it, they don't even have to really legally open it. You just have to send it to a known email that you and they have been communicating about real estate on. Even if their server accepts it, and they never do.
Well
Still
said.
considered delivered.
Yep, good point. So they are risk inherent, these scenarios. Attorneys generally don't favor these type of agreements.
Nor do our brokers.
But I understand, if that's the only way to get the deal done, then we got to be solution oriented and creative, and that is an option. If I am representing the buyer, then my client and I have a vested interest to make sure that the seller honors the terms of the agreement, that the seller respects the condition of the property, and that the seller timely vacates the property. I also have a motivation to make sure that there's adequate consideration to my client, to the buyer, for the seller's use and possession of the property. So two things that I advocate for if I'm representing the buyer are one, fair rent. Ryan Gertis at Breakfast said, fair market rent's not enough. He says rents are too low right now.
You got to cover the nut.
So you got to cover the nut. So anyway, adequate consideration, just call it that. And then number two, I always advocate, if I'm representing the buyer, a escrow holdback agreement where the seller agrees to withhold an adequate amount of the seller's proceeds in escrow for a definite period of time until the seller, A, timely vacates the property, and B, leaves it in the same condition.
All right, and I would just warn everybody as far as that goes. If you know you're going to have a post possession and you're going to have some sort of escrow holdback, you have to verify with your title company that they're willing to do them, because not all title companies are willing to do it. So you don't want to get 3 weeks into this
Right.
and making an assumption. So, but I want to get into, because we got about 15 minutes left. We have a saying on our team. Money never disappears; it just moves. And so we are always following the industry and always following the market, and where is the best opportunities for buyers, sellers, investors, and so forth. And right now, because the market really had slowed down for a period of time, there's a lot of sellers that tried to sell their home, wanted to sell their home, was unable to, but their interest rate is high twos, low threes, mid threes, which makes it very advantageous and attractive for a buyer to do some sort of creative seller financing. And instead of obtaining a new loan, find that vehicle in which to, I guess, take over the other loan. I know that's not a legal term. So I want to just start off by a minute or two just addressing, because I want to talk about the differences between a wrap and a carryback. I do want to spend a minute or two on wraps, but I also wanted to make sure everybody listening to this understands that West USA does not allow us as agents to oversee or be part of a contract that involves a wrap
For good reason.
or subject to.
Yeah. So
Yeah. So this is one of the areas that I have been seeing in my practice, real estate practice, the last 2 or 3 months now. More and more interest in so-called wrap agreements, the scenario where the buyer wants to purchase the property subject to the seller's existing mortgage with favorable rates that are around 3% or something like that, versus what they can get in the market today. So there you'll see several different creative strategies to try to get around this, or strategies to accomplish this goal. Wrap agreements are one of them. That's the scenario where truly the buyer purchases the property, closes escrow without satisfying the existing mortgage or mortgages, and just agrees with a promissory note and wrap agreement with the seller to continue making the payments to the seller's lender or lenders, and to pledge a new deed of trust. And in that scenario, the seller would actually convey the title, the deed, to the buyer, but would not be satisfying the existing mortgages. And then typically you'll have a neutral third-party account servicing agent set up for the purpose of receiving the buyer's monthly payments and then making sure that those payments get paid to the lender.
And just to clarify, and I wanted that our agents to understand the reason that West USA does not allow those, because the way that it is structured, there's the possibility that the lender could escalate, escalate the loan and basically do a due on, call the note due, and now everybody's got 30 days to satisfy the loan, putting everybody at risk and in jeopardy.
Yeah, most loans, many loans have a due on sale clause or an alienation clause, where if you do transfer title without notifying the lender, that is a violation, and they have the right to accelerate the loan and call it due and payable, and they give you just a very, very short time, like 7 days, to get it closed. So yeah, you're absolutely right. West USA doesn't want you to put your client in that position. And so this is a highly litigious aspect of it. So to protect you and your consumer, from a wrap perspective, which is, you already know, you're changing the deed to the property, so the title thinks they have collateral, the lender thinks they have collateral of the home, and they do in a way, but now it just clouds the whole legal process.
Yeah. So okay, I'll let you finish, but then let's segue into seller carrybacks.
So to be clear, I do not like wrap agreements. They do create tremendous risk for both the buyer and the seller. So risk to the buyer, because even if the buyer is current on the payments, as Todd's saying, if the lender becomes aware that the transaction has happened, that the seller conveyed an interest in the property without paying off the mortgage, they do have the absolute right to foreclose at that point. So that's a risk, and then it's also a risk to the seller, because so it's a risk to the buyer of them losing their property, losing their down payments that they've made, mortgage payments they've made, and it's a risk to the seller of having their credit destroyed and then getting thrown into litigation. So not a super great idea. But what do we do, Todd, if the buyer, because this is happening right now.
It is. Yep.
This is happening where buyers are saying, I don't care, I want to do it anyway.
Yeah.
And the sellers are on board with it. So what does your agent do if that's what the parties instruct?
Well, seeing that you're our corporate counsel, we basically have had these conversations, and realistically, the first thing to do is make sure that, well, you have to, if it's a wrap, you have to notify them that your company will not allow you to do that. But if you just do that alone, shame on you. What you should be doing is showing them other aspects of being able to acquire that property. It could be some of the new products we're going to talk about in just a second.
Okay.
But the thing is that if it's only a wrap and that's the only thing that they want to do, we will not allow you to represent them. My recommendation would be to ask them or tell them that you're not an attorney, so you really don't have the ability to share with them the significant risk that may happen. And then I would make sure you memorialize that in an email. Give them, obviously your real estate attorney's number to contact, or Chris Charles's number to contact.
That's good. And this whole strategy of the wrap agreement is in tension or in contradiction with the conversations that you're having with the clients. So like what you just went through, the 3-pack, that is the wrap agreement does not fit into that conversation. So it's them going against your advice basically at that point. If the clients come to me, I give them advice. I can kind of lead a horse to water, but can't force the water to the horse to drink. It was very freeing to me as a real estate professional many years ago when I realized my job is to advise the client of the risks, and it's up to them to make the decisions. Mm-hmm. So clients come to me, and if this happened just the first week of January, I advise them of all the risks and why they shouldn't do it, but they said, I don't care, I want to do it anyway. I'm like, all right, I'll do it the best way that I can to mitigate your risk and protect your interest. But I also prepare, so this is to answer your question or answer my question to you. I've prepared an affidavit to have the client sign where they are acknowledging all of these risks and why they shouldn't do it, why they've been told that they shouldn't do it. And then they sign that. So I think that's about the best that we can do, Todd.
All right. So according to Dwayne, seller carrybacks, though, are okay if you use the correct seller financing addendum from transaction desk. So kind of, I don't know, what are the glaring differences? And how is that used, and
Dodd-Frank,
exactly
too.
what is it?
Yeah.
So thankfully, I don't know if you guys have the statistics, how many cash transactions happened over the last few years. But there's a lot of cash transactions. So if you're seller, or if the seller in the transaction has no liens, if there's no mortgage, then a seller carryback option is a great solution.
Absolutely.
So that's the difference. The seller carryback contemplates the scenario where there is no mortgage. So the seller is just acting as the lender. I will tell you, an attorney colleague of mine, had this perspective that that really stuck with me, and I think is worth considering, because he's a friend of mine. He's an investor and does real estate investments on the side. And I asked him about seller carryback financing if he ever does it, and he said, "Well, if the bank won't loan to this guy, and if the bank thinks it's too risky, then why would I? Like the banks, they're experts at that underwriting process, and so because sometimes that's oftentimes in the past where seller carryback became an option, is because the borrower wasn't able to get financing elsewhere. So anyway, just think about that. Now it's a little bit different conversation, because now we've got people who are credit worthy. They just don't want to go to the market to get those rates.
Yeah, and I got an investor. I mean, he's got 10 properties financed. He's tapped out. So he really needs some sort of creative seller financing option because he can't get a mortgage right now.
Commercially.
Yeah.
Yeah. Dodd-Frank, when Dodd-Frank came out, it established, the rules under which a seller of residential real estate could participate as a seller carryback and seller financing. And the rules, I'm not going to profess to be the one that educates everybody on Dodd-Frank, but the rules were things like you couldn't own more than 3 properties, or
three is the limits. My my recollection.
Yeah, and and that there's just a lot of things that go along with that. So be very, very careful, because most sellers are totally unaware that Dodd-Frank changed their right to be able to carry paper against their home. And it established, which is to Mike's point, it established the fact that as a loan lender of money, you have to do the same due diligence effort in a underwriting / processing perspective, or at least a processing perspective, based on, I don't remember what the conditions were. So,
and it's not feasible. It's not feasible if you're just a private person. So seller carryback, great option as long as there is no existing mortgage. And then the other option that I'm not sure makes a ton of sense either. So I think Mike's 3-pack was great at the beginning.
Thank you. That's the nicest thing someone said to me all day.
I think that was paraphrased at the beginning.
Yeah. No, it's all downhill.
No, his 3-pack, I think that's sound advice to the buyers. The other wrap agreement, not a good idea. Seller carryback, okay if it applies. The third option would be a lease option to purchase agreement, which the economics of that may or may not make sense, and that's for your client to figure out, I guess. But a lease option, if you're representing the buyer, in order for that to make sense, you want to make sure to negotiate that the monthly payments that are being made are being applied, at least a portion or most of it or all of it, if you can, are being applied to the ultimate purchase price.
Yeah, and that's something that I know Todd, you, me, and Ryan have been working on, and we're working on it, and I'm gonna let Christopher put eyes on it, because for me and my investors, I think that's going to be the best route. So I say all that to just tell everybody to hang tight for a little while as we work through it. So here's the bad news, Chris. We've opened up so many can of worms that we are getting so many questions and comments. And so all we can do at this point is tell everybody to reach out to you. If you want to shoot Chris some emails, there's kind of his email address up on the screen. It's missing an L. So Chris, we got about a minute or two. Any parting words? Anything that's just on the horizon that when you come back, what we're going to be talking about? Or we're just having breakfast. It's just going to be a breakfast. Yeah. Or your favorite attorney joke.
He's like, there's 672 of those things. Which one do I pick?
Right. And I think you guys are far better at predicting the future than I am. I try to stick to mitigating the risks and just applying the law. But your guess is as good as mine is what's happening on the horizon. But I do see there being an opportunity for agents to be providing solutions on these financing issues.
All right. Chris, appreciate your time. And just another plug for Chris. One of the things we haven't even told you yet, but one of the things that we're starting to do, especially with all of our families, buyers that we're putting into homes, is now having that conversation with them. Are you protected? Do you have that will? Do you have that family trust in place? Because now that Mindy and I just went through that process last year with your team, I mean, I knew it was important. But dang, as we went through it, looking at all those scenarios, I'm like, every single one of my clients really just needs to at least have that exploratory conversation. And so Chris's team is amazing at that as well. So
cool. Thank you, Mike.
All righty. We leave you with the quote of the day: feel the fear and do it anyways. Nick, when are you just going to write your own quotes of the day?
I write all these actually, and I answered all of Christopher's questions already, so you guys are
Thanks,
taken care
Nick.
of.
Appreciate that.
So, yeah.
All right. Appreciate everybody joining us today. Go out and sell a home.